Sappi's fourth quarter results were released earlier today. On the telephone in London for Power Lunch is Ralph Boettger, the CEO of Sappi. Ralph, thanks very much for joining us. I'm just going to read out a couple of the highlights here of your numbers. Net profit, $107 million versus a net loss of 127 million. Volatile numbers. How have you turned it around?
Good afternoon to you. Yes, volatile is probably correct terminology for it. We've worked very hard in our company over the last 3 years to implement a strategy of turning around our weaker performing businesses and to further invest in the higher margin businesses. I think one of the most important turnarounds was the European business this year and indeed the quarter, which performed actually quite well in a very tough market. We reduced our cost base in Europe by over $100 million per annum. North American business also continued to perform quite well. And chemical cellulose, despite tough market conditions, performed exceptionally well.
Mm-hmm. Ralph, it's Alishia joining in on the conversation from our Johannesburg studios. And, very interesting, my co-anchor this morning highlighting that heading up a paper company, you must be feeling the way owners of a saddle company felt at the turn of the century with the advent of the vehicle. How do you respond to something like that? I'm sure you hear it often enough that paper is a dying industry.
Interesting what you're saying there. Certainly paper is not a dying industry. It is, and we've acknowledged that, and we plan our whole business model on the fact that the demand for coated graphic paper will decline. It has declined by about 25% since 2008, and it's continuing to decline at the rate of about 2 to 3%, and we expect that to continue for at least the next 4 to 5 years. And that is a combination of the economic situation we're facing worldwide, but also the effect of electronic media on the use of paper. There are, however, areas where the demand for coated fine paper is growing. And, we plan our business to continue to make good margins and very strong cash flow from our paper businesses for at least the next decade. However, all our investment into growth is going into in other areas of our business. Chemical cellulose being a very, very important growth area for us, and we're spending a lot of money at our Ngudwana plant in Mpumalanga, over 2 billion rand, and another $170 million in our North American business to increase our capacity in that very exciting part of our business. So yes, we have to manage capacity in a declining market for paper, but aggressively growing our business in faster growing higher margin businesses.
Ralph, I must say, I'm sort of bucking the trend. I know what Alishia is saying, but electronic media actually makes me print more stuff. I mean, I'm surrounded by reams and reams of paper. I mean, I'm your ideal customer, but sadly, I'm old-fashioned. I want to look at the sort of outlook statement that you came up with, and you talk about global uncertainty. We've seen some numbers coming out of Germany which shows a slowdown in the biggest economy in Europe. We've got anemic growth in the United States of America, and emerging markets are the only sort of bright lights, and even some of them are starting to dim a little bit. How closely linked to global GDP is your business?
Yeah, we can't escape what's happening in the world, and in terms of GDP growth, it does affect our business, and therefore our cautious outlook when we talk about the year going ahead. All our products are affected, demand for all our products, by what's happening in the world, even the chemical cellulose, which is used mainly in textiles. I think we have a fairly robust business model now. We've taken out a huge amount of cost in our business, and it's on the back of that we're expecting our net earnings to grow despite a tough economic environment. But it's not going to be a year, in our opinion, where you shoot out the lights. It's a year where we're going to be very careful in how we manage our costs and our capacity.
With those efficiencies and, having to be front of mind for you, Ralph, take us through the kind of, cost savings and where you're seeing cost savings coming through right now. What kind of efficiencies you're putting into the system exactly? Because you've highlighted that operating profit for the quarter rose to $118 million, and that compared with $80 million last year. So quite an improvement coming through there.
It's a combination of many factors, but the main ones were where we took out higher cost capacity permanently. We closed down our Biberest mill in Europe. We've taken out a number of paper machines and or pulp mills in our South African business. We have centralized a number of services. We are buying on a much more aggressive and I think coordinated basis our raw materials across the globe, utilizing our buying power more efficiently. And we've also looked at the product recipes to find ways of making products using less input costs and less energy. And it's a combination of all those factors that's allowed us to improve the business. And all those actions are continuing going into the future.
Ralph, you've spoken about your own capacity. What about the capacity of your competitors? Is it a global trend worldwide that capacity is being reined in, shut down, and therefore, because of the nature of commodities and commodity cycles, pricing will start to react?
Yeah, on the paper side, that is something that we've worked very hard on, and a number of other industry players as well. To be honest with you, we are still faced with overcapacity in the graphic paper business. More needs to be done. We will continue to do our fair share of that. We are the market leader in Europe with a 30% market share. But we also believe that more needs to be done in the industry. And when that happens, when we get back to what we talk about, the new normal, which we think will happen once the world starts getting into a slow growth phase, I think prices will increase. Luckily for us, and fortunately, we are also in industries where the growth is strong, like the chemical cellulose. But what you're saying in terms of paper is absolutely true.